What's up, fellow investors? I'm Matt. In this video, I'm going to walk through my analysis of the well-known tech company Microsoft, ticker symbol MSFT. On this channel, it's my goal to log my journey to financial freedom by sharing my portfolio and how I'm doing this through disciplined saving and smart investing. Microsoft is a company that I own a position in, and I'll share that later in this video, but let's get into Microsoft after the intro. At the time I'm making this video, Microsoft has a share price of about $255 a share. At this price, this gives Microsoft a market cap of about $1.9 trillion, making it one of the largest tech companies on the market. Microsoft has three revenue segments that it reports on. That's going to be its productivity and business processes, its intelligent cloud, and its personal computing. Let's try to dive into each of these to understand them better. So on this slide, I have Microsoft's revenue split into its three different revenue segments. The numbers I pulled are from Microsoft's fiscal year 2020 annual report. It's also good to note that Microsoft's fiscal year ends in June. So Microsoft's fiscal year 2020 ended in June 2020. But just looking at Microsoft's different revenue segments, each of its three segments takes up about a third of its business. But let's start by looking into Microsoft's productivity and business processes segment. In Microsoft's fiscal year 2020, this segment did about $46.4 billion in revenue. And this segment is going to include a lot of Microsoft's applications and its Office suite. Microsoft used to sell a lot of these applications through licenses or hard copies that you could get at the store, but now it's really switching to a subscription model. So if you subscribe to Microsoft's 365 personal or commercial service, you're going to get access to the whole suite of Microsoft applications. Most of everyone is pretty familiar with the flagship applications that Microsoft is known for. This is going to be like Excel, PowerPoint, Word, and Outlook. These are all applications that are pretty integral to the everyday operations of a lot of companies across the nation and the globe. But over the recent years, Microsoft has been doing a really good job of adding newer applications to its Microsoft 365 subscription service, which make it even more appealing for customers. This is going to include newer applications like Microsoft Teams, which is a workspace chat and video conferencing app. It's going to be pretty similar to Slack, but that application has been even more important as more people have been working from home or working from different locations. It's also going to include SharePoint, which is Microsoft's cloud-based document management and storage system. Another application that's really starting to grow fast in Microsoft Suite is going to be its Dynamics 365. Dynamics 365 is going to be Microsoft's ERP, Enterprise Resource Planning, and Customer Relational Management, or CRM solution. And another application I wanted to include in this segment is going to be LinkedIn. If you don't know, LinkedIn is like a site for professionals to network, hire, or get sales leads. But just going over this segment, Microsoft now has a really strong lineup when it comes to applications that are going to be used in the workplace. So if a business is going to be paying for a subscription to Microsoft 365 to use Excel, PowerPoint, Word, or Outlook, it's very likely that, instead of paying for Slack, they'll probably look into Teams if that's going to work for them. Or instead of paying for Dropbox or Box, they're probably going to look into SharePoint to see if that's going to fit their needs. This isn't a case that Microsoft is going to win every single market, but this does make Microsoft a strong competitor because all of Microsoft's apps are always going to be well integrated with each other, easy to use, and very price competitive. And it makes competing against Microsoft very difficult because if you have a software that's going up against Microsoft, you have to compete against the utility that Microsoft provides. If we look at Microsoft's next segment, this is going to be its intelligent cloud. Its intelligent cloud did about $48.3 billion in revenue in Microsoft's fiscal year 2020, and this is the fastest growing segment that Microsoft currently reports on. Microsoft's intelligent cloud includes basically two different types of revenue. It's going to include its cloud computing or hosting platform, which is going to be what everyone knows as Microsoft Azure. And it's also going to include Microsoft's cloud services, which are going to be services related to, database software, logging, analytics, security, deployment. Any application or customer being onboarded on the cloud, they're going to have the choice either to use Microsoft's cloud services or of third parties to include in their cloud stack. But for Microsoft, most of the growth is coming from hosting a lot of these applications on its cloud software. So this is really where the growth from Microsoft Azure is coming from. And Microsoft's final segment is going to be its more personal computing. This segment did about $48.2 billion of revenue in fiscal year 2020. And this is the segment that's going to include a lot of the hardware. So hardware is going to include its sales on services and laptops. And this segment is also going to include all its sales related to its Xbox and gaming division. And then it's also going to include its licensing for its Windows operating system. So this would be like Windows 10. While this isn't the most exciting segment, it does have synergies with its business and productivity and intelligent cloud, because it helps broaden exposure to Microsoft software to additional users, and it also helps it collect data and provide better insights on its own technologies and software to help improve user experience. On this slide, I have Microsoft's revenue growth from 2016 to 2020 split out by its different segments. In 2016, Microsoft's revenue was about $91.1 billion, and now in 2020, it's grown all the way to $143 billion. So Microsoft has been doing a good job of growing its top line. And you can definitely see by splitting out the different segments that its productivity and business practices and intelligent cloud are the two segments that are really growing the fastest and the most consistently. And along with this growth, these segments also have better operating margins. So as those segments have been growing, Microsoft's operating margin has improved from 29% to 37%. And because Microsoft is still expected to have good growth going forward, we can expect that its operating margin is going to continue to improve in the future. So overall, if we look at Microsoft's revenue from 2019 to 2020, it grew by 14%, which is very impressive for a company of Microsoft's size. And if we look at its productivity and business practices segment, that grew by 13%. And this is mainly driven by its growth in Microsoft 365 commercial subscriptions, which grew by 24%, its revenue from LinkedIn, which grew by 20%, and its Dynamics 365 growth, which was 42%. Now, Dynamics 365 is a smaller portion of Microsoft's revenue in the segment right now, but it is a very good space for Microsoft to be in, and it's growing very quickly. So I think it's going to get more significant in the future. If we look at Microsoft's Intelligent Cloud, Microsoft's Intelligent Cloud segment grew by 24% last year. So this is mainly driven by its growth in cloud computing or cloud hosting, which is Microsoft Azure. That grew by 56% year over year, and its other cloud services grew by 8%. So most of the growth is coming from its cloud computing and hosting service. And the cloud industry is a very good industry to be in right now, and Microsoft has been executing very well on this segment. And finally, in 2019, Microsoft's personal computing segment grew by 6%. And one of the reasons that this showed lackluster growth last year is this segment does include its gaming division, and Microsoft just released the new series of consoles after this report was filed. So it's pretty typical for hardware companies or gaming companies to have a slump in hardware sales or console sales right before a new release. Now, if we look at how this revenue growth has contributed to Microsoft's operating income, like I was saying on the last slide, Microsoft's operating margin has improved significantly over the last 6 years. And, this becomes pretty clear when you look at its operating income. In 2015, Microsoft's operating income was $18.5 billion, and now that number has basically tripled, and now it's close to $53 billion. And this comes out to a operating income compounded growth rate of about 23.4%, which is very, very good. So now that we have a good understanding of Microsoft business and how it reports on its revenue and its revenue growth over the last 5 years, let's look into its balance sheet and cash flow statement. And after we look into those, we'll have enough knowledge to where we can try to do a valuation of Microsoft to get a fair value of Microsoft right now. So this is Microsoft's balance sheet from its last annual filing. Just going down, so its current assets, it has about $13.5 billion in cash and about $23 billion in short-term investments. This gives Microsoft a whopping $136 billion in cash or cash equivalents that's sitting on its balance sheet. That is a very healthy amount. And if we look at its total current assets, it looks like it's sitting on about $181.9 billion. And if we compare that to its total current liabilities of $72.3 billion, Microsoft has a very strong balance sheet, and it's showing no signs that it won't be able to pay any of its short-term obligations that it has right now. And if we continue down its assets, it's got about $44 billion in property and equipment, and this is a pretty substantial increase from 2019. In 2019, it had about $36.4 billion. So this is telling us that Microsoft has been reinvesting heavily into the business, but overall it has about $300 billion in total assets, and its total liabilities is about $183 billion. And if we continue down the balance sheet to look at Microsoft's equity grew from about $102 billion in 2019 to $118 billion. This is no surprise because Microsoft is a very profitable company right now, and we expect it to be increasing its equity, especially if we saw that the company is reinvesting a lot of its profits into property and equipment, which is going to show up here on its asset side. But Microsoft's retained earnings grew from $24.1 billion to $34.5. So overall, it looks like Microsoft has a very healthy balance sheet, and it's in a good position to reinvest its profits into its segments like its cloud or productivity and business segments to continue to grow the revenue going forward. Now, if we look at Microsoft's cash flow statement, Microsoft's cash flow from operations in 2020 was about $60.6 billion. So the most important factor here is looking at basically Microsoft's net income. We're adding back its depreciation, which is about $13 billion, and this is a non-cash item. This is why we're adding it back in. And we're also going to be adding back its stock-based compensation. Now, if we go down to look at Microsoft's cash used for financing, we can see that Microsoft purchased about $23 billion in stocks. It issued about $1.3 billion on top of the $5.2 it issued up here, and it issued about $15 billion for its dividends. It also used some cash to pay off some long-term debt. So it looks like in this section, Microsoft is using a fair amount of money to buy back shares and also pay out dividends to its shareholders. If we go to its cash flow from investing, what's important and stands out to me is that it spent about $15.4 billion reinvesting back into the business for CapEx. This is important because it does look like Microsoft is using some of its cash from operations to reinvest back into the business to continue to help grow its cloud and other businesses. So its net change in cash from 2019 to 2020 was pretty minimal, just $2 billion. So this raised its cash and cash equivalents to what we saw on the balance sheet to $13.5 billion. All right, so we've done a pretty good job of doing our due diligence on looking at the fundamentals of Microsoft. Now let's try to put this all together and figure out what is the best way to value Microsoft right now. In this case, I think the best way for us to value Microsoft is going to be using the discounted cash flow method for valuing a stock. This is going to require us to estimate Microsoft's cash flows going out over the next couple years and to discount Microsoft's cash flows and what we expect to be its terminal value to the present. And once we get this present value of Microsoft's cash flows, we can divide that by the outstanding shares and get an estimate of its fair value right now. This is the discounted cash flow model that I have for Microsoft. Just going down these lines just to get used to the format. On the top, I have its revenue, and right under it, I have its revenue growth year over year. Then I have its operating income and operating income margin. And from its operating income, I have an assumption to get its free cash flow going forward. And it's important for us to remember while doing this exercise that this is a model, and this is really just to give us an estimate of basically what analysts are assuming and what kind of fair value this calculates out to right now. And so continuing down to its operating income, like we saw when we were looking at its income growth over the last 6 years, we really saw an increase in its operating income margin. And so I kept increasing this slightly, basically 2% from 2021, 2022, 2023, and then I kind of tapered it off at about 45%. And then to get from operating income to free cash flow, we need to take out a couple of other expenses, like we need to add in depreciation and amortization, but we need to take out capex, interest, and taxes. And so I have a spreadsheet that I kind of was able to track these assumptions in to get these free cash flow estimates. But like everything, I always like to check it against what analysts are showing. And it seemed pretty in line with what a lot of analysts were assuming right now from the reports that I saw. So now we have basically all of the free cash flows. I'm discounting all of these to the present at a required rate of return of about 8.5%. This actually was a bit more conservative than what I saw a lot of the analysts using, because Microsoft has a very low weighted average cost of capital, and so most of them were using below 8.5%, but I didn't want to use below that, and I was assuming probably a higher perpetual growth rate. So these two assumptions basically even out with each other. So in order to get the fair value of Microsoft using this method, I need to get the net present value of its cash flows, its current cash that it has on its balance sheet, and its terminal value. This came out to a net present value of about $2 trillion, which is just slightly above Microsoft's current market cap. And so when I divided it by its outstanding shares right now, I got a fair value of about $270 a share. And this fair value of $270 does make sense because Microsoft's current share price is around $255, and it's fairly expensive. While Microsoft's share price is $255, that calculates to a price to earnings of about 37. So Microsoft stock is expensive, but I do own a position in Microsoft. And despite it being expensive, I do think that there is a chance that it can continue to surpass expectations of growth over the next 3 years. So while I'm not adding to my position, I'm very comfortable holding my position in Microsoft because I do think it has a lot of levers for growth going forward, and it's a great company. So for the sake of transparency, I wanted to go over my position in Microsoft. This isn't a company that I own through typical shares like most investors do. During the middle of the pandemic last year in March 2020, I decided to purchase a long-term call option on Microsoft. So this can get a little bit confusing, especially if you're not familiar with options. So I'll try to walk through this and explain it clearly. So in March 2020, I bought a long-term call contract on Microsoft that's going to expire January 2022. The contract has a strike price of $145, and each contract means that I have the option to buy Microsoft or 100 shares of Microsoft at $145. For this contract, I paid $27 a share, and since each contract is basically gives me the option to buy 100 shares, in total I paid $2,700, and this means my break even for this contract is if Microsoft finishes above $145 plus $27, which is $172 a share by January 2022. Since Microsoft has gone up pretty significantly from the time I purchased it, the current price on the contract is about $111, and my total gain in the position is about $8,300, which is about 300%. This is an option that I really always planned on exercising if it was going to be in the money at expiration. So this means I will be buying 100 shares of Microsoft at $145. So at Microsoft's current price of $255, it is a bit expensive and it is pretty much fairly priced, but I do not mind holding a fairly valued company, even though it is expensive from a price to earnings perspective, because I do still believe in Microsoft's growth prospects going forward, and it's a great company, and I do think it's going to continue to improve its operating efficiency. And even though it's not a company I would like to add right now, it is a company that I'm very happy to continue to own because it just has a lot of potential and has been very good at exceeding expectations, and I'm hoping it can continue to do so. I hope you enjoyed my analysis of Microsoft. I think it's a very good company, and if you made it this far in the video, don't forget to give me a like and subscribe. I'll also be posting some other links at the end, so if you're interested in other content that I posted, please check it out. And as always, this is Market Matt. Good luck investing.